New GDP numbers show the economy is growing at a lower rate than expected. The latest GDP report shows the U.S. economy grew at 1.4% in the fourth quarter. That's down from 4.4% in the previous quarter. ABC's Elizabeth Schulze is here with more on what it all means. Hi, Elizabeth. So what do these numbers tell you about the state of the economy?
Diane, this number shows a slowdown in the economy in the final 3 months of last year. That 1.4% GDP growth is about half of what economists were expecting, so definitely below expectations. And as you pointed out, it's a slowdown from what we'd seen earlier in the year as far as how fast the economy was growing, which was above 4%. What this report shows us is there is still strong investment happening from businesses. We're seeing a lot of investment from companies on AI. That is helping to boost growth. Consumer spending still solid. Remember, consumers account for more than 2/3 of all spending in the economy. So if they are out spending, buying stuff, that generally keeps the economy growing. That is what we saw, a solid number with consumer spending. And it does look like, Diane, a little bit of the lower growth from this report is because of the government shutdown, shaving off some of the higher growth that we had seen. But this is definitely a number that is far below expectations, shows a slowdown for sure.
Elizabeth, meanwhile, another newly released report on the Federal Reserve's preferred measure of inflation shows prices were up 2.9% in December from a year ago. What's behind that?
Yeah, we look really closely at this number, Diane, because this is what the Fed looks at when it's trying to understand where inflation is headed. And what this shows us is inflation is still above where the Fed wants it to be. So 2.9% inflation rate in December from a year ago. The Fed wants that number to be at 2%. And when you kind of dig into why we look at this data especially, it covers a lot of the places you really spend money on in your day-to-day services. So medical care, housing, those are places where we see people spending more money than they have over the past year. That has been a lot higher, and that's contributing to those higher prices in this data. That's something the Fed's going to be looking at. And likely, Diane, what this does is keep the Fed in a position where it's less likely to cut interest rates with inflation still above where it wants it to be.
So what does this tell you about the impact of President Trump's tariffs?
And we are looking so closely at how those tariffs are impacting the prices we pay, everything from groceries to electronics to some of those clothes. We have seen some of the impact of those tariffs, especially hit sectors like where we are importing goods that we do not make in the U.S. So that had been especially the case for some groceries. Think about coffee, think about beef, think about some fresh fruits and vegetables. We did see food prices up in this report. There has been an expectation on Wall Street, Diane, that we'll start to see some of the impact of these tariffs wane over the next 6 to 9 months. Businesses have absorbed a lot of those costs. They have passed down costs to consumers. The key question really with tariffs, Diane, is where does the Supreme Court come down on this? Does it make a decision when it comes to whether some of those tariffs might be overturned or not, Diane?
All right, Elizabeth Schulze, thank you.